Hey, ladies and gentlemen, let's look over our progress since we've taken a look at the MRO. The MRO stock in the oil sector has been a nice profit opportunity for me, and I'm using these daily videos on the stock to show you how volatility can affect the value and the net revenues on options. So without further ado, let's take a moment and recap. We were looking at a stock that went from, I don't know, $22 down to $20 over the past week, and then it's gone right back up to about 22.50, making a net gain of about 50 cents. The options, I'll read them to you. An option at the 21.50 stock price went from $220 in value. I'm sorry, from $140 to $220 in value. That's a considerable gain. The next price up at $22. Uh, the price went from 111 to 150, netting you about 45 bucks. At 22.50, it went up from 98 to 126. Again, a hefty gain of about 30 bucks. That's right around where the stock is trading today, maybe closer to 23 after hours. The price of the option went from 65 to about 95. It's another 30 bucks. Think about that, 50% gains in a week on a price move of 50 cents on a stock worth 22 bucks. Stocks and options are worth looking at. We're looking at what is it to hedge a trade, what is it to protect your gains and losses. And without further ado, let's look at the stock today. All right, now as we look at the MRO stock price today, we'll notice that its closing price um, appears to be about the midpoint or the average or median between where it's been over the past 10 days. That's day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's about a little more than 2 trading weeks. It's 11 days or two trading weeks. So when we made the video, I'll point you back to where we were on the momentum indicators. The momentum indicators indicated the momentum was in a downward trend, and that was about last Wednesday. We noted that when we looked at it today, it had, as predicted, started to change. Instead of heading down, it started changing, and so we've made a 50% increase. Where are we? Where we were on momentum. Momentum was oversold. Momentum is now towards the mean. That suggests that the momentum has been increasing, and there's no reason to think that's going to stop. Now, what happened in the past couple of days? OPEC said, look, we tried a month ago to cut supply on a very, very methodical manner, in a methodical manner, rather. They just set a price target. What they've said is that didn't work. Um, so we're going to start decreasing supply by a number of barrels a month. I think they said 100,000 or a million. And so why? Because they don't want to continually see the price of their oil drop, and their profits are going to, diminish considerably when you cut supply. The price will go up because the demand is artificially inflated anyway. So our positions that we had purchased last Wednesday, which I will say was last Thursday rather, which was right here, have increased in value considerably. A technical analyst will tell you there's an upward trend because the lows of the day continue to be higher than the initial low of when we bought. I'm looking at a target of $25 by the end of June, which is 2.5 weeks away. I think in any case, in the option contract value, which I purchased, um, should increase considerably. We're going to track it day to day. Again, we're comparing momentum, how it actually did reflect the price change. So that's the price when the momentum changed. That's um, that's where it went. It went as high as 24 bucks. People took profit, I guess. The volume suggests that the volume has been highest when there were purchases, both today, 2 days ago. And as you can see, we could suggest now that instead of this red trend, we're now in a green trend. There seem to be more white candles there than not. So I'm glad you enjoyed the video. Again, look at the momentum indicators, how they are now toward the mean. They were at the bottom. The RSI was closer to the bottom. Now it's at the mean. There was a change of direction. We were looking for that. We wanted to buy a stock as it was going up. We actually really nailed the bottom, and we talked about that. Let's look at the actual price action next video. So when I started the video, we were looking at a expiration date of June 23rd on options, and that was on or about June 1st, just about a week ago. These columns of volume and open interest are interesting because we can track whether people started buying more or less of these things. So let's look at this one here, the open interest of 46 and the corresponding strike price. Okay, just remember that. Look at the price, remember it, and let's look at where it went. All right, so on Friday, which was the day after we purchased some options, or the day after we started tracking this stock, we said, let's look at the $22 strike price. We said the option interest was here. Okay, sorry, here. Hope that helps. 49. Thought I said 46, meant 49. The volume on the previous day was 0. That meant that nothing really happened, but between Thursday and Friday, or on Friday, some 40 contracts were traded. That means interest started accruing. And as we had said previously in the last video, the price of that option went to 181 from about a buck. All right. And it appears that you start looking at numbers like in the hundreds, and okay, like quite literally, we want to see today 600 or some contracts are open. That's on Friday at the strike price that we said 24 and above. The previous day, I can tell you right now, it looks like the open interest was considerably less than several hundred. Okay, so everyone's in agreement that in call options over 22, 23 bucks, there is interest accruing. The higher demand, as we discussed in economics, the higher the price. So we're moving in the right direction. We're looking at this on a daily basis till June 23rd. See how many hundreds of bucks we can spend. I have actually bought a $25 call on Thursday. $25 call on Thursday. It hasn't really accrued much value, but that's because there's a lot of time left. Let's see how it does later in the week. Thanks for watching. Hit the like. Send me a comment. And today is the end of the day on Tuesday. We'll call this day 4 of looking at MRO. First video I made was on Wednesday. Wednesday to Thursday is day 1. Thursday to Friday is day 2. Friday to Monday is day 3. Monday to Tuesday is day 4. And what we're looking at is a price that has gone, as we said, in the upward direction. It went as high as $24 and sold off immediately on the news, that OPEC was cutting supply, meaning the prices are going to go up. People took profit at 24 for whatever reason. The volume has increased. And again, the baseline we were looking at was the $22 call. Let's look at the $22 call. We said it started at 111, went to 180, and it's now back down to 150. So what are we saying? Let's talk about value. I'll tell you right now that the 111 to 180 price range of about $70 divided by 2 is 35. 35 from 180 is about 145. So this stock has retraced about 50% from its gain in terms of the option price. In terms of what that means, this is in a very strong buy position. Why? Because a retracement of up to 50% is considered healthy in an uptrend. We've dictated and noted that there were higher lows on this stock, that the only net gain is 50 cents on the stock, yet the option has gone up considerably from 110 to 180, then 150. Still 40 bucks is still over 40%. I think that's a lot of money to be made in less than a couple of days. I don't think anybody's paying attention to the volatility MRO or anything like that. But let's look at it in the next couple of days. Let's remember these numbers and look at it in a couple of days and see if this price is going to go up from 150 or not. And it's in a strong, it's in a strong position in terms of Fibonacci ranges. Tomorrow should be interesting. there's no reason to think that this thing isn't going to start going up. The concern is how fast, because I don't want my position to all of a sudden become illiquid. Let's discuss that in tomorrow's video and what is short covering, short squeeze.